Good morning. It's great to have your company this Tuesday, the 13th of April. I'm Jessica Amir, a market analyst with Bell Direct. And again, apologies for the lateness of this morning, Bell. Well, vaccine talks will dominate headlines today for two reasons. The federal government has taken the Johnson & Johnson vaccine off the table, and Scott Morrison has said that Aussies will likely not be vaccinated until the end of the year. Now, this means travel and tourism stocks will be back in focus, particularly because Qantas plan to resume international flights in October, because that's when Australians were thought to be vaccinated by. So looking at the orders at the moment, it's looking like Qantas will likely see a bit of a negative day. Keep in mind that Qantas's shares have gained about 18% from January. So it looks like Qantas will see some profit taking today. Keep in mind that quarterly rebalances are taking place and investors are taking profits from stocks that have made sizable gains. Also keep in mind that more broadly, the world is awaiting the US earnings season kick off on Thursday. Now, why am I mentioning this? Well, quarterly earnings are expected to be up 22%. Now, in anticipation of this, overnight we saw US equities pretty much hit the pause button, taking a bit of a breather from their records, but all three of the major indices treaded water, closing in the red overnight. The S&P 500 closed flat, and the Nasdaq was down 0.4%. But what does that mean for us? Well, it's not likely to have much of a bearing. Today, the futures are suggesting the market would lift 0.2%, but something to keep in mind that the Aussie share market is in a bullish breakout. Now, what do I mean by that? Well, we're seeing the shorter term moving average cross above and consistently trade above the longer term average price of the market. Now, this is something that's a technical indicator suggesting the Aussie market is likely to continue to move further north. Keep in mind the last time that this occurred, this technical indicator was back in October. And then back in October, we saw the technical indicator form and the Aussie share market rose about 18% to February's peak. So keep that in mind. This is why I'm telling you that the Aussie share market is in a bullish breakout zone with those two averages converging for the first time since October last year. Now, something also to keep in mind is two economic important reads are out today: new home sales and business confidence. New home sales will be out for March, released by HIA, expected to show sales rose 20% following the 24% jump in Feb. So I'd be watching those real estate stocks like Elders, ELD, and McGrath, MEA, both in bullish zones, and building and construction stocks as well, like BKW, ABC and CSR. Those three are also in bullish breakout zones. Business confidence data out, expected to show conditions continue to rise given job ads that are a 12-year high. Businesses are feeling pretty chuffed. Restrictions are easing. So if the readouts are better than expected, expect banks and the broad market to rally. Westpac in particular, that's touted as the most undervalued bank stock according to Morgan Stanley. In particular, Westpac set to unveil $1 billion of savings. So also keep in mind today, some of the most traded stocks from yesterday. For Bell Direct Advantage, the most traded stocks were on IPO yesterday. Delorean, DEL, they IPO'd, coming onto the market after raising capital at 20 cents, and they closed at a big premium, 42 cents. Now, DEL, for those that don't know, it's a renewable energy company. They're a wholesale, or they sell wholesale energy under the brand Clean Tech Energy. Last year, they made a net profit of $2.6 million. So keep DEL on your radar. Digital Wine Ventures, DW8, was also one of the most traded stocks yesterday, back in the most traded circuit, and it rose 11%. Now, trading ideas that could be worth a look: two upgrades. The A2 Milk Company was upgraded from a hold to a buy with an increased price target of $9.50. Now, this is by Bell Potter. So why the upgrade? Well, China distribution is showing signs of early life. Also, the Daigou infant milk formula exports have risen for 2 straight months. Now, A2M's chart is in a downtrend, so people will be questioning when this will end. We're likely to see these 2 points converge, so the 15-day and the 30-day average, and then once they two converge and cross over, then you'd expect a breakout for A2M. Keep in mind that A2M is 60% lower than its July 2020 high and is also trading at 2018 lows. Now, A2M, it's a Bell Potter buy, a Credit Suisse and UBS buy. Meanwhile, the property stock Dexus was reiterated as a Macquarie buy with a $10.33 price target and an estimated dividend yield of over 4.5%. Now, Dexus, keep in mind that it's had a sizable gain of about 8% recently. Now, Macquarie expects office rents to fall between 20 to 40% or 20 to 30%, and expects asset valuations to fall by as much as 7.5%. But its chart is bullish in the short term. We know that Dexus is trading above its longer term average, so keep that in mind, and it has gained about 8% since the beginning of this month. Lastly, bullish charting signals have been identified in gallium lithium, GLN, Mach 7 Technologies, M7T, and People Infrastructure, PPE. That's according to Trading Central. I'm Jessica Ramir with Bell Direct. Thanks for your company, and again, apologies for the lateness of this morning, Bell. Have a great day.